Hello and welcome to Your Money Their Hands. And this week, our regular Deepak Lalwani, the Director of India Investments at Astaire Partners, the London-based stockbrokers, is with us again. Well, Deepak, so much seems to have happened since we last talked. Can we start, first of all, the recent purchase by the central bank in India of 200 tonnes of gold? Why?
Well, the Reserve Bank of India has stated that it wished to increase its holdings of gold, so the gold content of its foreign exchange reserves had fallen to about 4%. With this purchase, it goes up to about 6%, still lower than many developed countries. But I think there is another message as well. India wishes to engage with global institutions more. It wishes to help out with this purchase almost 50% of the IMF's total of 403 tons. And it also wants to play a larger role in the global institutions. So it all sort of wrapped up, ticked the various boxes.
Yeah, I was fascinated by that. Looking at the country, we've talked before when you were last here about the monsoons and the drought. We've had droughts in the north and monsoons in the south. What's that done to the investment outlook? Because they've been pretty severe, haven't they?
They have been severe, the worst in almost 4 decades. But as far as the stock market is concerned, it has discounted the effects of the drought. In economic terms, I believe that the GDP will fall by about 1.5% to 2%, but all this news is discounted in the stock market. The Sensex, for example, is trading around the 16,500 level, just under 1,000 points off its high for this year, trading on a P/E ratio of about 19 times, quite rich in my view. But it just shows the buoyancy and the optimism of investors in the Indian markets.
Now, the central bank kept interest rates on hold, but it's beginning to look like they're making hawkish noises about inflation. How's that going to affect investor sentiment, bearing in mind the billions that have been pouring in since the low points of March into India?
Well, the RBI has been making hawkish noises. The latest monetary policy review indicated a decidedly hawkish tone. Interest rates will have to go up. The loose accommodative policy has to be reversed. This is very much in the price. So, for example, I anticipate that interest rates will go up by about 0.25% in early 2010. Very much in the price at the moment.
So nothing to deter investors, if you like,
at this stage,
buying
no.
into the story?
Absolutely not at this stage.
The government, newish government, when we spoke last time, very new government, but it's bedding in, but it seems to be making noises that it's not going to take away the fiscal stimulus too quickly, and there will be a lot of money for infrastructure investments and railroads in particular. Is that going to help the investment case for people like you?
Absolutely, because infrastructure is a long-term story. India needs it desperately to improve infrastructure, and so that story will certainly continue. As far as withdrawing the economic stimulus is concerned, what has been happening is that, yes, it has helped all along, but at some stage they will have to start exiting. Now it's a balance, a delicate balance between growth and halting that growth and inflation, and of course addressing the fiscal deficit as well. So it's taking these 3 things into consideration. I believe that the government will start exiting from early 2010.
Now, we've talked before about what many foreign investors found very draconian and quite irksome rules, but with hindsight, always a precise science, I know, but they actually have done India a favour, haven't they?
Absolutely. In terms of those same bureaucratic controls that frustrated and irritated many of us out here, in fact, that has come to the benefit of India. Those draconian rules, those bureaucratic rules have actually helped India to have a firewall against the virus from the West, and it has certainly helped the economy.
And in terms of the backdrop that we've just talked to, looking at people and their portfolios going forward, what are the sectors that you particularly favour?
Infrastructure, as I mentioned before, long-term story, will continue to be attractive. Capital goods, pharmaceuticals, metals, these are some of the sectors that I like.
Deepak, thank you as always.
You're welcome.
Deepak Lalwani there, the Director of India Investments at Astaire Partners, the London-based stockbroker. That's it for this week, but don't forget to keep up to date with all the latest news, views and analysis online and of course in the Saturday and Sunday papers. Thank you for watching, and please do join us again next time.